Across Florida, the idea of owning a home isn't simply slipping away, it's being ripped apart piece by piece, and the culprit is soaring insurance costs. From sleek high-rise condos overlooking the Miami shoreline to peaceful family neighborhoods around Orlando, people are waking up to a hard truth: protecting their homes has become financially impossible. Insurance premiums have exploded, while coverage continues to shrink. In many cases, homeowners are now paying more for insurance than they do for their mortgage, which would have sounded unthinkable just a few years ago. Natural disaster exposure, stricter flood zone classifications, aging roofs, and a rapidly shrinking pool of insurers willing to operate in the state have collided to form the ultimate financial storm. As a result, tens of thousands of Floridians are being pushed to the edge, losing policies without warning, being forced into expensive state-backed plans, or walking away from homes they once thought they'd keep forever. In this video, we break down the top 10 Florida cities where skyrocketing insurance costs are dismantling homeownership in 2025. We're digging into real numbers, regional trends, and first-hand stories from the people living through this crisis. Make sure to subscribe to discover the cities for clear, in-depth looks at America's housing landscape, one city at a time, one storm at a time, because what Florida is experiencing right now may be only the beginning, and your state could be next. Number 10. West Palm Beach. West Palm Beach has long carried an air of confidence and sophistication, shimmering towers, swaying palms, and that feeling that you've finally made it. It's the kind of place where luxury doesn't just exist, it feels natural. But in 2025, even this polished slice of paradise is buckling under Florida's insurance meltdown. Homeowners across Palm Beach County are now staring at average insurance bills topping $11,000 per year, and waterfront properties, many are paying dramatically more. What started as a coastal concern has spread at lightning speed. Reinsurance companies are pulling out, private insurers are tightening their rules, and policies that used to seem outrageous at five-figure totals are beginning to creep towards six. For some residents, insurance has overtaken the mortgage as their single largest monthly payment. High-rise condos along Flagler Drive and in the buzzing downtown district once symbolized safety, success, and smart investment. Today, they feel like financial pressure cookers. Condo associations are being hit with multi-million-dollar renewal bills, and those costs aren't absorbed, they're handed straight to the homeowners. In certain luxury buildings, owners are paying thousands each year in special assessments just to keep their coverage alive. Others have faced the nightmare scenario: their policies were canceled outright, sending them scrambling for whatever limited coverage options remain. And don't assume the problem stops at the shoreline. Neighborhoods miles inland, communities that many believed were insulated from coastal risk, are now being swept into the crisis. Updated flood maps, tougher roof age requirements, and new underwriting rules have triggered price jumps across the board. Some homeowners are slashing coverage to hang on. Others are cashing out and heading north before renewal season delivers another blow. On the surface, West Palm Beach still sparkles: sun-washed skies, yachts gliding through the intracoastal, and streets overflowing with energy and wealth. But behind that postcard image, the math is telling a very different story. Families, retirees, and longtime residents are discovering that the mortgage isn't the enemy anymore. The real threat to their American dream home isn't buying it, it's affording to protect it from the next storm. Number 9. Kissimmee. Kissimmee used to be the classic middle-class Florida dream, a cozy spot just outside Orlando's theme park magic, full of peaceful streets, family-friendly cul-de-sacs, and price tags regular folks could actually manage. But in 2025, that comfortable dream is getting harder and more expensive to hold on to. Rising insurance costs are hitting everyday homeowners right where it hurts, in their monthly budget and their long-term ability to stay rooted in their community. Most houses in Osceola County sprang up during the big suburban boom of the 80s and 90s. At the time, they were built well and built fast, perfect for growing families and Florida newcomers. But standards were different then. Roofs, wind resistance, and aging electrical systems weren't designed for today's hurricane intensity or the razor-sharp insurance inspections we're seeing now. These older homes are suddenly red flag magnets, and a single issue can make or break an insurance renewal. Premiums have surged to painful levels. The typical homeowner in Kissimmee is now spending over $6,400 a year just to insure their property, and that's before flood insurance even enters the conversation. For short-term rental operators near the theme park corridors, things are even harsher. Some have watched their rates double in only 2 years. What used to be a reliable investment, a vacation rental with steady tourist demand, is now a financial landmine. Many investors are dumping properties, sometimes at a loss, because the numbers simply don't work anymore. Insurance has become the deciding factor in whether a family can buy or keep a home here. Lenders are rejecting applications when insurance costs push buyers beyond loan limits. Local agents say that nearly 1 in 4 home sales falls apart during the insurance approval process. Think about that. Deals aren't collapsing over home prices or interest rates, but because insurance alone has become unaffordable, residents are running out of options. Some are swallowing enormous premiums. Others are rolling the dice and going without full coverage, dropping wind protection, removing flood insurance, and just hoping nature spares them. It's a risky bet, and if a major storm hits Central Florida again, the fallout could send the local housing market into a tailspin. Kissimmee still looks magical on the surface. Palm-lined streets, fireworks glowing from the Disney skyline, and sunshine that feels like a promise. But beneath that postcard beauty, families are struggling to hold on to security. Affordable homeownership, once the cornerstone of this community, is slipping through people's fingers. And this isn't an isolated problem. It's the opening chapter of a new reality, one where insurance isn't just a bill, it's the gatekeeper deciding who gets to build a life in Florida, and who gets pushed out. Number 8. Cape Coral. Cape Coral used to be the postcard image of the Florida dream, a maze of sparkling canals, year-round sunshine, and waterfront homes that didn't require billionaire money made this city explode in popularity. Families moved here chasing a better life. Retirees settled in for peaceful golden years, and investors poured in expecting reliable returns. It was paradise, affordable, sunny, and full of promise. But by 2025, that dream has collided head-on with reality. Cape Coral has become one of the hardest-hit areas in Florida's insurance emergency, and residents are feeling it in every corner of the housing market. Premiums in this once-attainable coastal city have soared to the top tier of the state. With high hurricane exposure, significant flood risk, and aging infrastructure, home insurance has shifted from a routine expense to a luxury many can't sustain. The shadow of past storms, especially the devastating blow from Hurricane Ian, still hangs over the region. That storm didn't just leave physical damage, it triggered long-term financial aftershocks. What used to be a manageable yearly cost is now a breaking point for countless homeowners. In Lee County, the average homeowner is shelling out $10,000 to $12,000 a year just to insure a typical home. And if you're near the water, prepare to pay far more than that. Banks are refusing outdated policies, which forces homeowners into expensive replacements. Meanwhile, Citizens Florida's last resort insurer now covers almost 1/3 of policies in the region, a clear sign of how many private insurance companies have fled the market. For retirees living on fixed incomes, there simply isn't enough room in the budget for these increases. Younger buyers, even with solid income, are backing out of deals the moment the insurance quote appears. Local agents say sales aren't collapsing over list prices, they're collapsing over insurance sticker shock. Entire neighborhoods that once buzzed with newcomers now feel quieter, with listings sitting longer and enthusiasm fading. Even families who can technically afford the new rates are starting to question the logic. Waterfront owners are paying insurance bills comparable to luxury market property taxes in places like coastal California. Others are making a desperate choice, dropping coverage entirely and gambling with self-insurance just to stay in their homes. It's a risky strategy, but for some, it's the only strategy. Cape Coral still sparkles in the sunlight, canals stretch out like blue ribbons, and palm trees still dance in the breeze, but beneath the postcard surface, there's a growing sense of strain. The same water that once made this city irresistible is now the biggest threat to its future, and to the people who dared to chase the Florida dream here. Number 7. Fort Lauderdale. Fort Lauderdale has long been the poster child for effortless wealth and coastal elegance. It's a place where gleaming yachts move gracefully through sapphire blue canals, sleek glass towers catch the sun along the intracoastal, and luxury living feels as natural as the ocean breeze. But in 2025, the glamour is starting to show cracks. Not because of another hurricane, but because the very insurance system designed to protect homeowners from those storms is buckling under pressure. In the city's most coveted zip codes 33316 and 3331, annual insurance bills for ordinary waterfront homes have surged into the $15,000 range. These aren't sprawling celebrity estates, they're standard high-end properties that, until recently, didn't cost anywhere near this much to protect. As major insurers pull out, citing severe storm vulnerability and rising climate-driven risk, thousands of residents are being forced into Citizens Florida's insurer of last resort. Coverage there comes with limited protection and big gaps, leaving families uneasy and financially exposed. Condo owners aren't escaping the pain either. Along Los Olas and the beachfront, associations are issuing special assessments, often $3,000 to $6,000 per unit, just to secure insurance renewals. Retirees and fixed-income residents are being stretched to their limit. Insurers are demanding expensive inspections before renewing policies, and even small repair issues can derail coverage. Local real estate agents report an unsettling trend. Wealthy buyers who once paid cash for waterfront condos and canal-front homes are backing away the moment they see insurance quotes. Sellers are cutting asking prices to keep deals alive. Developers, previously eager to build the next shimmering tower, are hitting pause. Confidence in one of the nation's most elite housing markets is slipping, and fast. On the surface, Fort Lauderdale still looks like pure paradise. Palm trees ripple in the breeze, boats drift lazily through glittering waterways. Sunny sidewalks and stylish marinas still project effortless coastal bliss. But beneath that postcard exterior, a quiet economic storm is brewing. One denied policy, one soaring premium, one canceled deal at a time. Want a deeper look into Florida's shifting housing landscape? Subscribe to Discover the Cities. We bring you the real data, the on-the-ground stories, and the financial pressure points reshaping communities across the Sunshine State. Because what's unfolding in Fort Lauderdale isn't just a local crisis, it's a preview of what could soon confront every coastal city in America. Number 6. Pensacola. Pensacola has always felt like Florida's hidden treasure, a peaceful Gulf Coast escape where small-town warmth, sugar-white beaches, and reasonable housing costs blended into a lifestyle many Floridians envied. For decades, it delivered exactly what people moved here to find: a slower pace, natural beauty, and affordability far outside the budgets of places like Miami or Tampa. But in 2025, that calm coastal dream has been interrupted. Not by roaring storms, but by the financial winds of Florida's skyrocketing insurance crisis. Across Escambia County, homeowners have watched premiums shoot up more than 45% since 2023, and the increases show no signs of slowing down. New FEMA flood zone maps have dragged even inland communities into mandatory coverage areas. Families who once felt comfortably outside flood risk woke up to find their neighborhoods suddenly labeled high-risk zones, instantly doubling their insurance bills. The typical homeowner is now paying $8,000 to $10,000 every year for coverage, and that's for standard properties. Coastal areas like Perdido Key and East Hill are seeing premiums hit $15,000 and beyond, even for modest homes. Private insurers are stepping back, blaming worsening storm threats and aging infrastructure. With fewer companies writing policies, many residents are being funneled into state-run insurance options, plans that cost more, cover less, and leave homeowners feeling exposed. The ripple effect on daily life is undeniable. Home sales are slowing as banks reject mortgage applications tied to unaffordable insurance. Roof replacements, once a $20,000 expense, now push $40,000, especially under strict inspection standards demanded by insurers. Contractors are overwhelmed, and homeowners are racing to fix every minor issue before renewal time, terrified of losing coverage entirely. This pressure is weighing heavily on longtime locals, retirees who plan to stretch savings here, military families who put roots down near the base, and working-class residents who once counted Pensacola as one of the last affordable coastal options. Many say the numbers no longer add up, and the dream they built their lives around is slipping away. Yet Pensacola still shines. The sunsets over the Gulf look like watercolor paintings. The breeze rolls in across sparkling beaches, and the city's charm hasn't disappeared. It just hides a growing strain beneath the surface. Pensacola is sending a clear message: no part of Florida is immune. Even quiet, budget-friendly communities are being reshaped by the cost of simply protecting a home. And here in this once affordable coastal refuge, insurance is redefining what it means to truly live and stay in the Sunshine State. Number 5. Sarasota. Sarasota has always felt like the perfect blend of elegance and ease, pristine beaches that rank among the best in the world, a thriving arts culture, and neighborhoods lined with some of Florida's most coveted real estate. For decades, it was where luxury living met relaxed coastal charm. But in 2025, that stunning backdrop comes with a painful new reality. Insurance costs are becoming Sarasota's heaviest burden. The average homeowner here is now facing over $9,000 a year in insurance premiums. And for properties near the water, especially around Siesta Key and Longboat Key, that cost can easily soar past $18,000 annually. Even modest inland homes aren't safe. Owners are being hit with strict windstorm upgrades, mandatory impact-resistant windows, and hurricane deductibles that can add thousands more to their annual bills. Historic communities are feeling the pressure most intensely. Older homes, once admired for their charm and character, are now being turned away by private insurers altogether. That leaves many residents stuck with expensive state-backed policies that offer far less protection than they once relied on. Meanwhile, condo owners are watching their associations scramble to stay insured. In some buildings, HOA fees have doubled over the past 2 years, not to upgrade amenities, but simply to keep coverage in place. For years, Sarasota has been a magnet for retirees and seasonal residents seeking an upscale but peaceful coastal lifestyle. Today, many of those same homeowners say it feels like a financial trap. Real estate agents report that insurance quotes now shock buyers more than listing prices, and transactions fall apart almost daily once insurance is factored in. Even affluent buyers, people who once shrugged at rising costs, are stepping back, reconsidering whether paradise is worth the premium. This shift is reshaping the community. Longtime residents are selling earlier than planned to avoid future spikes. Others are downsizing, relocating inland, or leaving Florida completely. Investors who once saw Sarasota as a guaranteed win are backing away, causing listings to sit longer and confidence to waver. And yet Sarasota remains breathtaking. Turquoise waters ripple along the coastline, palm-lined streets sway in the warm breeze, and sunsets melt into gold across the Gulf. But beneath the postcard image, a warning is growing louder. Even the most beautiful places have limits. Paradise now comes with a price tag, and it's rising faster than anyone expected. For more detailed insights into Florida's evolving housing landscape, subscribe to Discover the Cities. We dive into real numbers, real stories, and the ongoing battle between homeowners and insurance forces reshaping the Sunshine State. Sarasota's challenge isn't about luxury anymore. It's about whether residents can afford to stay in the paradise they built their lives around. Number 4. Tampa. For years, Tampa represented the pure Florida promise: sunshine, booming opportunity, and homes regular families could still afford. From the sleek high-rises of Water Street to quiet neighborhoods in Riverview and Carrollwood, this city symbolized growth, possibility, and a future filled with optimism. But in 2025, Tampa has found itself at the center of Florida's insurance emergency, and the fallout is reshaping daily life for thousands. Insurance premiums here have surged almost 60% since 2022. Homeowners who once paid around $4,000 each year are now staring down bills of $8,000, even in houses equipped with brand-new roofs and high-impact storm windows. Flood insurance, once seen as optional or only necessary along the water, is now being enforced as updated FEMA maps pull more neighborhoods into designated risk zones. Citizens insurance, the safety net meant only for those turned away by private companies, is stretched to its limits. Along the Hillsborough River and throughout coastal pockets, insurers are quietly backing out. Some remaining carriers have introduced aggressive policy terms, like requiring full roof replacements every 10 years, regardless of remaining life or structural condition. Real estate deals are collapsing at unprecedented rates. Buyers walk away the moment final insurance quotes land in their inbox. Sellers are slashing prices, not because property values have fallen, but because potential buyers simply can't manage the insurance math. Even Tampa's rapid growth areas, Wesley Chapel, Apollo Beach, and beyond, are seeing construction slow as developers watch qualified eager buyers suddenly disappear once insurance costs are disclosed. Lenders refuse to close loans without confirmed active policies, leaving families stuck in limbo between approval and denial. And yet Tampa still looks vibrant on the surface. The skyline gleams at golden hour. Beaches fill with locals and tourists chasing salt air weekends. Restaurants, stadiums, and riverwalks pulse with life. The energy and ambition that define Tampa haven't faded, but the financial foundation underneath is shifting. Today, affordability in Tampa isn't about whether you can purchase a house, it's whether you can afford to protect it. Insurance has become the deciding factor, the gatekeeper between dream and reality. For more clear, data-driven insight into Florida's evolving housing landscape, subscribe to Discover the Cities. We break down the numbers, the real-world impact, and the personal stories behind this unfolding crisis. Because in Tampa and across the Sunshine State, the most powerful storm isn't in the sky. It's the insurance system rewriting what homeownership means in Florida. Number 3. Miami. Miami has always thrived on swagger, a city fueled by glitz, global attention, and the belief that it could weather anything. For decades, the message was clear. Miami doesn't bend, it doesn't break, it reinvents. But in 2025, that signature confidence is being quietly tested. Behind the gleaming skyline and waterfront glamour, a financial fault line is growing, and it's driven by insurance. In some of Miami's most iconic coastal neighborhoods, Brickell, Edgewater, and South Beach, homeowners are now staring at average annual premiums above $25,000. And that's for standard-sized homes under 2,000 square feet. These aren't mega mansions or sprawling estates. Meanwhile, high-end waterfront properties and luxury condo units can easily see annual insurance and special assessment totals soar past $50,000. Why? The risks are stacking up faster than the skyline. Sea level rise continues to nibble at foundations. Saltwater intrusion is eating away at roads, utilities, and concrete. Storm surge forecasts keep worsening, and updated climate models warn of increasingly powerful hurricanes. With every new report, more private insurance companies decide to exit the market, leaving residents with state-backed plans that come with steep premiums and limited protection. Condo associations across Miami-Dade are struggling to stay afloat. Entire buildings are now spending millions each year just to secure coverage. Special assessments ranging from $10,000 to $20,000 per unit have become almost routine, and some towers are nearing financial collapse under the weight of insurance inflation and maintenance demands. Even wealthy homeowners are feeling boxed in. Real estate agents say potential buyers are walking away the moment insurance quotes hit their inbox. Luxury investors, once eager to grab prime Miami property, are slowing down or backing off entirely. Developers and property managers warn that insurance pressure, not a lack of demand, is the force jamming the gears of Miami's powerhouse real estate machine, and still, Miami sparkles. Biscayne Bay shines like polished glass, nightlife pulses, supercars glide through palm-lined streets, and from a distance, the magic looks untouchable. Yet beneath that polished facade, anxiety is building. Miami, the city that sold the world on unlimited luxury and sunshine, is now confronting the price of paradise, one policy at a time. Number 2. Naples. Naples has long been regarded as the crown jewel of Florida's coastline, a refined sanctuary where wealth, calm, and natural beauty blended into a life many only dreamed of. Elegant neighborhoods, world-class beaches, and a reputation for safety made it the ultimate retirement haven. But in 2025, that polished image is under pressure. Behind manicured streets and shimmering waterfront views, Naples is wrestling with a rapidly growing insurance crisis. High-end homeowners in Collier County are now staring at yearly premiums exceeding $30,000, and that jaw-dropping price tag isn't reserved for mansions. Mid-sized homes, once comfortably affordable for well-off retirees or second-home buyers, now come with insurance bills that rival and sometimes exceed mortgage payments. Even properties miles from the water, once considered low risk, are seeing premiums spike thanks to climate risk surcharges, stricter inspections, and updated safety requirements. The result? A quiet but undeniable shift. Long-time residents who expected to live out their future here are putting homes on the market early. Investors are backing out, and many homeowners associations are scrambling to survive, imposing emergency assessments just to keep their buildings insured. Some complexes have already lost coverage altogether, leaving residents exposed and anxious. For decades, Naples represented stability, a fortified enclave where wealth and planning could outmatch disruption. Now the cracks are visible. Private insurers are shrinking their presence. Citizens, the state-run fallback option, is drowning in demand. And securing private coverage for luxury coastal properties has become a near impossible task unless buyers are willing to accept sky-high deductibles and limited protections. Even those who once felt insulated are reconsidering their futures. Real estate agents note a shift. More out-of-state sellers, fewer enthusiastic buyers, and wealthy individuals who once snapped up Naples property in cash, now hesitating or looking elsewhere. States with lower climate exposure and more predictable insurance markets suddenly look far more appealing. Visually, Naples remains breathtaking. The sunsets still ignite the Gulf in brilliant gold, and the palm-lined avenues still whisper luxury. But beneath that postcard serenity, a sobering truth is emerging. Paradise comes with a price, and for many, that price is becoming too steep to stay. Number 1. Key West. Key West has always felt like the final stop on the road to paradise, a sun-soaked island at the edge of the map where the sunsets never miss, the water stretches forever, and life moves with barefoot ease. But in 2025, this tropical retreat carries a new and sobering distinction. It is now the most expensive place in Florida to insure a home. Here, insurance isn't just high, it borders on impossible. A modest single-family property can demand around $38,000 a year in premiums before you even add flood coverage, hurricane riders, or condo association fees. Larger waterfront homes, they routinely surpass $50,000 annually, pushing ownership into a territory that even wealthy residents are questioning. So why are the numbers so extreme? Geography and vulnerability collide here. Key West sits isolated at the far end of the Florida Keys, surrounded by warm open water and exposed to every forecasted hurricane cone, every storm surge projection, every climate risk model. With limited evacuation routes and aging infrastructure, the island is seen as ground zero for high-risk insurance. Private carriers have all but disappeared, leaving homeowners with limited, pricey, and often inadequate fallback options. The strain is everywhere. Condo associations, once thought stable, are struggling just to secure annual coverage. Landlords are abandoning rentals that no longer make financial sense. Lifelong residents, cons who never dreamed of living anywhere else, are suddenly weighing whether they can stay. Many are doing the unthinkable, dropping insurance altogether and hoping luck holds. It's a dangerous bet, but for some, it's the only affordable one left. Real estate agents describe a market frozen in hesitation. The homes that used to fly off the market now sit untouched for months. Cash buyers and investors who once saw Key West as a forever value market are stepping back, and retirees who believed this island would be their final stop are packing up quietly, unwilling to pay annual premiums higher than their tax bills and upkeep combined. And yet, the beauty remains untarnished. Pastel cottages still glow in the morning light. The emerald ocean still hums against the shoreline. Mallory Square still bursts into applause at sunset. Key West hasn't lost its magic, but it is losing its affordability, one insurance bill at a time. The cost of living here can no longer be understood through mortgage payments or listing prices. In Key West, homeownership has become a test of endurance and survival. This isn't just a Key West problem anymore. What began on the coast has spread across the state. Florida's insurance crisis has evolved into a statewide emergency, touching families from Ocala to Naples, from Tampa to the Keys. It's rewriting retirement plans, halting real estate deals, funding exodus waves, and reshaping who even can live in the Sunshine State. People can plan for mortgages, they can budget taxes, but insurance, unpredictable, skyrocketing, unavoidable, has become the bill no one can control, negotiate, or prepare for. And as insurance continues to rise, the future of homeownership in Florida is no longer guaranteed.